So now on the Innovation Show, we welcome Paul Rohan of Rohan Consulting. Welcome to the show.
Thanks very much, Aidan.
So I read your book, PSD2, in plain English, and it is a fantastic read for anybody involved in fintech or banking or any financial services. And before we talk about that, Paul, it'd be great to understand your background coming up to this book and how you've learned so much and packed it into such a plain-speaking book.
Okay, thanks very much. I suppose in terms of my background, my career and my activities over many, many years seem to have always been at the combination of financial services and the digital economy. And I started out in banking, in international banking, and I still remember delivering instructions to a TEDx room. Okay, and believe me, back then TEDx was high tech. It was as high tech as an Irish bank got in terms of sending messages and exchanging money with banks on the other side of the world. So I progressed through that process and very much involved in creating electronic banking solutions in the 1980s and the early 90s, even predating the internet. Okay, vividly remember the advent of the internet. I think I was involved in putting together the first banking website in about 1995, which was nothing more than morning commentary from our dealing room going out on Ireland Online. So that was the advent of high-tech banking in those days.
And when was that, Paul?
That was about mid-90s, okay? And when I come across young entrepreneurs today talking about mobile digital fintech, I tell them a unbelievably true story that I was involved in mobile digital fintech before mobile phones. So back in the mid-90s, in AIB's Treasury Department, we would have connected our dealing room databases with all the various foreign exchange rates. And bear in mind, this was pre-euro, so every European country had its own currency. And through early SMS technology, we were sending out those rates to electronic pagers. So we had given hundreds of electronic pagers to our best corporate customers. And when the French franc or the German mark or the Spanish peseta moved, we could actually alert these guys because guess what? It was pre-mobile phones. So they would get to a phone.
Wow.
So we had it segmented.
The first push notification.
So this was mobile digital fintech before mobile phones. So in that respect, I have a lot of background in that space. And then we faced the challenge of digital commerce from the 90s onwards. Banks, I suppose, are not prisoners of their past, but they're grappling with their past because they have been building systems and processes since the 70s and 80s, and modernizing it to the modern modular environment is a mammoth task because in some ways it's like trying to switch from Boeing to Airbus without actually landing any flights.
Yeah.
So trade can't be disrupted. People's business has to go on. So there's a vast retrofitting exercise going on across the industry, assisted and prompted and catalyzed by regulation, new technologies. So a giant game of chess.
Yeah. But isn't that like you've a deep understanding of innovation, and that's basically what most companies are going through. Any traditional company that's based on legacy practices is going through the same transition, and it's like keep the current business going while working on another business or several businesses in between, because you don't know which one's actually going to come to the fore.
Yeah, and that's why it's funny. People have a funny perspective on brilliant businesses, and I'm probably showing my age here because they would focus on the most modern, cutting-edge businesses that have emerged in the last few years and have achieved hyper growth. Okay, and they tend to come from Silicon Valley because you can get to a couple of 100 million customers without even going international in the States effectively. And they have that critical mass of capital and talent and stuff like this. So younger people tend to find the companies that have emerged in the last few years and have beautiful, intuitive solutions as, you know, these guys will be around forever. Whereas I show my age, I think IBM is a phenomenal business. Like, can you imagine being right up there for decades?
Yeah, and they keep reinventing themselves.
Keep reinventing. And sorry, they stick to their core, and there's no doubt they'll have lost some position. But to still be up there in the top rank after 30, 40 years, I think that's phenomenal. Yeah. Because in terms of sociology and incentives and people's behaviour and dealing with vast numbers of staff, I'd argue that's a more remarkable leadership and management achievement than some of the single product businesses that have achieved hypergrowth in the last number of years because they've caught a wave
Yeah, and I have to
Okay.
agree with you because, and even the fact that, this was before this kind of madness of the VC funding that we see for some companies that is, it's much easier to get funding today than it was back then.
Yeah.
But also, like, I'm a huge fan of IBM and what they've done as well, and Microsoft.
Yeah.
And I people kind of go, "What kind of jobs did you do?" I worked in a pub when I was 16, and I wish I worked as a cleaner in Microsoft and got stock. I
Yeah.
didn't get paid; I got stock because if you look at their stock growth it's consistently growing, and they've
Yeah.
such a varied portfolio. Purchases like Minecraft,
Yeah.
like brilliant thinking, and there's such brilliant people in those companies, and they get criticized from the outside world, being compared to Apple and Facebook
Yeah.
and Google, etc. But Microsoft is one of those companies like IBM that has many pockets of innovation, consistent innovation, but inside.
Yeah. I think as well, the very big companies are getting cuter in terms of responding to the waves of innovation. So I remember in the early 2000s, maybe 2002, meeting somebody senior from Apple at an event in the States, and they were on their uppers. And iTunes, although we didn't know at the time what it was going to, it was part of a sequence of initiatives. It was the last roll of the dice. Okay, but they weren't going for trying to respond to the stuff that had disrupted them in the current wave. They were looking beyond the next wave. So I think the Microsofts, the Worlds, and the IBMs are the big companies that have been successful in the past. When they find themselves challenged by a new wave of innovation, they're getting cuter. They're not actually trying to respond to that wave because to some extent they've missed the boat.
Yes.
They look beyond the following wave where they actually have 3 or 4 years to prepare, and that probably gives, they have the capital, okay, there's no doubt about it, and they have the talent, but in terms of mobilizing the big bureaucracy that they've built to service the existing success, that, they don't try and respond to the stuff that's going to cause them problems in the next 6 months. They look to the next 6 years, and then they can turn the oil tanker in time for that. Yeah. So I do think the big established firms today have a better sense now of how to respond and not try and be nimble for something that's going to cause them problems in the next 6 months. It's the big wave beyond that.
And that's a lovely segue for PSD2 as well, because we have something similar there. So it'd be great to understand firstly what PSD2 is. And, I can't recommend the book highly enough because it does break it down into plain English. And I know that was a process in itself, going through that. But it'd be great if you brought us through what PSD2 was.
Yeah. Well, I suppose there's a combination of motivations. First of all, PSD2 is short for the second EU Payment Services Directive. So that's quite not as catchy. Therefore, we shorten it to PSD2. What it is quite a mold-breaking intervention by European regulatory authorities. And it's quite a change in direction for Europe because in terms of its impact on a country like Ireland, the euro came in 1999 and it harmonised the central bank systems in Ireland with all the other central bank systems in the Eurozone. And then in 2002, we got our notes and coins. So in that period of time, the transition to the euro, the biggest payments, the ones that go between central banks, were harmonised to a European platform. And then the smallest payments, which are a fiver for this and 2 cents for that, were also harmonised to European standard. In the following years, all the tedious stuff in the middle that people don't realise is there, around payroll, direct debits, which is actually a vastly bigger project, called the Single Euro Payments Areas, took place. And that ultimately happened in 2014. So we had a period where many countries were in the Eurozone, but actually all had their separate daily banking, daily settlement infrastructure. And it was the biggest banking project ever to harmonise those platforms. So I'm ashamed, stroke proud to say, I was on that project all the way through. And I once stood up at a conference in front of some techs who laughed when I said that I've been on a project for 14 years. And then they were quite pleased. And I said, I thought there might only be 3 or 4 years left. But all of these things were harmonisations.
Yeah.
Okay. And we'd sat around the table and we'd haggle out an improvement, but a harmonisation of German, Italian, French, British, Irish standards into something that we could all live with. So it was harmonisation. PSD2 is actually mold breaking in that it's absolutely greenfield. And it's the European regulator trying to effectively provoking a big transition in the openness of the banking system, but trying to do it in a controlled fashion. Okay, so some of the technologies people in the street are seeing now, where you want to use a new app or a new service, and rather than go through the tedious process of keying in all your details and your email address and stuff like this, it asks you, do you just want to use your Facebook profile or your LinkedIn profile to identify yourself? All of these sharing, composable businesses that are emerging in the modern economy is coming to banking. And your bank account data, which, if you choose, can now be shared with third parties. Okay, so as things stand, there's no regulatory onus on banks to make your data available to a third party. If they're to do it, it is on the back of a commercial contract with you and a commercial contract with a third party. This is regulatory intervention to make bank data a more dynamic commercial commodity.
And it's interesting you used the analogy of the social sign-in. So when Twitter or Facebook or LinkedIn ask for, is it okay for another third party to use your data? For people to understand that, because that is essentially giving your data over to that company, depending on what you sign up for. So I thought that was a really good. That's how I understood it when I looked at PSD2. That I might use Fire, for example, pay with Fire, and it might go. Pay with Fire would like to use your details, and I'm a customer of Bank of Ireland or AIB, and it might ask me, do I want to use that? That's how it will work.
That's how it will work. But bear in mind, Pay with Fire or another innovative third party like that has to go through a regulatory process. Okay, so a startup without proper data protection, without proper information security, without proper capital, without proper contingency plans, won't get an option to ask you.
Okay. So there's a huge amount of work on the startup side.
Yeah, there is. And there's also risk in that there's probably a manageable amount of risk in terms of Facebook or Microsoft or Pay with Fire or your auditor or your accountant asking, is it okay to get at your bank data because it's efficient and it'll save us all money and time. There's risk in that a fake Microsoft or a fake Facebook could ask you for access to your bank data. So the regulatory authorities and the industry are trying to generate this economic value and this customer value, and at the same time preserve probably the most precious thing of all, which is confidence in the integrity of the financial system.
And is that a way that? So you mentioned about the fake company. So there's a huge opportunity, I suppose, for fraud. But at the same time, can the bank dial up that and control who it wants to work with in a way and kind of go, you know what, these two guys in a garage, Wozniak and Jobs, I don't trust these guys.
Well, these things are being hammered out at the moment in terms of the detailed standard, and the big haggle between regulators and fintechs and banks in terms of the security controls. I think the best way to understand the challenge here is that some of the processes that will emerge under PSD2 are going to bring an effective rival to the first time to the card schemes. Okay, so the card schemes have been with us since the late 1950s, and the man on the street has a smell for danger at this stage around their card. Okay, you don't hand it over to just anybody. You keep it on your person. You kind of want to know the retailers you're dealing with, even online, when you use your card. When somebody emails you that you don't know and asks for your card number, you kind of know, I'm probably not going to do this. So there's been a big sociological diffusion of the card schemes over more than 50 years, and people have a nose for danger. There's fraud. There's an attack vector that the hackers and the fraudsters use, and then there's all of these people who defend against it. And you now advise your bank when you're going overseas through some mechanism that you're going to be in a strange country, so they don't stop your card or things like this. So there's an environment that's 60 years being established. We're now the regulators want competition for the card schemes, and PSD2 is an enabler of that. And we're trying to truncate the same level of, obviously, the same level of security for large transactions, small transactions, but at the same time to trying to bring a lot of client education into a very, very short time frame.
Yeah, and what is the time frame?
The time frame is that this will pass into law in 2018 in every EU member state. There's some ambiguities yet in terms of, will all the regulatory technical standards be ready in terms of how physically everything's going to be handled, and then what will the regulator's disposition be if it isn't fully live at the time. This is not unusual in terms of some of the European initiatives. But how would I characterize it, Aidan? It's a rolling start.
Yeah.
It's a rolling start. There'll be elements of it that get up and running faster than others. Some banks will go early and introduce these types of services even before they're obliged to do so, because they'll see an opportunity to get the jump on competition, to maybe build relationships with some of the most progressive, well-capitalized fintechs. So quite a complex and dynamic environment, changing a lot of things that have been established for many decades in terms of arrival to the card schemes, more progressive ways of sharing data. This is exactly what the regulators want. Okay, they're looking for new mechanisms, they're looking for new competition. Certainly European regulators want to see a more dynamic European economy starting to rival Silicon Valley. So they're shaking things up.
When I read the book, I was like, this is like a playbook for a bank. It is that good that it just goes basically, you just follow this, you're doing everything right. I'm just going to take a step back for a second, Paul, because you mentioned APIs and we have a jargon jar on the show to explain what APIs, because we take it for granted. But I think your explanation of APIs in the book is really good. Can we run through that for a second?
Yeah, well sorry, I did the most vivid physical analogy for APIs, I suppose, is the wall sockets we see around us every day, which, stepping back from the physical reality of it, they're an abstraction layer. Okay, so there's guys out there in the power generation business who are trying to decide whether to abandon fossil fuels, and what will the regulatory disposition be about nuclear, what about wind energy, wave energy, vast investments, big decisions to be made. Do they get them down cables that are underground, on pylons, all this type of stuff. But the end point they're aiming for is the wall socket. Okay, so they don't have to worry about getting to a point in your house where you get a jackhammer, okay, and break open the wall and then plumb in with little bits of different coloured wires your TV or your microwave. Okay, so they're just aiming for the wall socket. And the wall socket expects 2 prongs if you're in Europe, 3 prongs if you're here. Are they round? Are they square? What's the voltage? Okay, so it's an interface, an abstraction layer. And then on the other side of the wall, there is your TV, your microwave, your cooker, your devices, all this type of stuff. And they're oblivious to whether it's nuclear, wind, wave, whatever it is. And so 2 vast industries interface through something very simple but very, very powerful. Predictable design. Okay, so what APIs are equivalent in the software world is an abstraction layer where an endpoint that 2 different processes can aim for. And how I'd contrast them with something that people in the man on the street would be most familiar with would be websites. Okay, websites develop information to an endpoint, but if material moves from one page to another, or a button changes in sequence, you're probably going to find it, because a human is adaptable and flexible, and you'll keep going till you find it. A website is a human readable interface, okay, but nevertheless an abstraction layer between a business and a consumer. An API is a machine readable interface, which means that the machines can come in and get data and get processes from the API, but the API itself has to be really, really precise. Okay, so a computer program is powerful and fast, but it's dumb. It needs to find stuff where it's been told it's going to find it, and therefore, unlike a website, the API has to be very precisely engineered so that other programs and processes can come in and the API behaves exactly as predicted, and data and or processes can be extracted by the other program. So machine readable interfaces.
Yeah, and it's a huge, I mean, apart from banking, the whole world is going that way. It's an API economy now. And, you also used the analogy of Lego blocks, that your content needs to be atomized into these blocks that are understandable, but also help you build easily. So if I am a website creator, my content is the energy going through, and then it can easily be picked up by an app or an aggregator or whatever it may be, and full with metadata. Any kind of data I want to put into that is pumped through the API, and it's I mean, that opens it up for such disruption. And to come back to, you mentioned the cards, so Visa, MasterCard, for example. Like, so there's new competition for those guys now coming as well. So can we talk about the disruption in that world? Yeah,
well, I suppose payment methodologies, by their nature, have a tendency to monopolize. Okay, by their nature. So trade is complex enough in terms of actual physical goods and services, or goods and services that we want to actually exchange, than having big ambiguities around how we're going to get paid. Okay, so it's nothing to do with the people working in these processes, but like barter was a monopoly at a point in time. Okay, then coins came along and became an effective, well, not a monopoly, but there was probably some barter, but a dominant means of settlement. Okay, then checks came along and became the dominant means of settlement. So by their nature, these things can get tired and old-fashioned compared to other parts of the economy, but there's so much unpredictability in the general trading economy. Business people and consumers just want predictability around how we're going to settle. Okay, so these things can get dated, and in certain cases they can get so dated that they hold back the general economy. Or because these things become a standard method, economies of scale come into play. Okay, so so competition tends to happen either on economies of scope or economies of scale. Economies of scope, I do it different and better, or scale, I do it more often and cheaper. Okay, and because methodologies of settling between ourselves become dominated by a certain method, it tends to end up that 3 or 4 providers of that method end up with 80% of the market. Okay, it's an absolutely natural phenomenon, and two things tend to happen to break that up. Sometimes in combination, sometimes separately. Sometimes a spectacular new way of doing things comes in and supersedes the old ways over time. But it has to be very powerful, okay, because we all want to get paid and we don't care, it's a bit clunky. Or there's regulatory intervention, okay, where the providers that have achieved enormous economies of scale with the standardized method are making supernormal profits. Okay, so to put it mildly, antitrust regulators and the card schemes have had a colourful relationship over many decades, partly because these platforms tend to achieve dominance with asymmetric pricing. Okay, so I sometimes get into trouble by describing asymmetric pricing as discos where one gender rather than the other get in free. Okay, so I'll try and pick one way that's least offensive to explain this. But if there's a disco where all the girls get in free, probably displaying my own orientation here, all the boys want to go.
Yeah.
Okay, and that's asymmetric pricing. Notwithstanding the fact that they have to pay a fiver in, if they think all the girls in town are going to be there, they go.
Yeah.
Okay.
Network effects.
Network effects, right? And I suppose the card schemes work on that basis, whereby they are a spectacular deal for consumers. People who traditionally who have accepted cards have to accept all cards. They can't charge you more if it's debit or credit, even though they're being charged different rates. So in that asymmetric pricing approach to build the platform and acceptance, you have regulators intervening then trying to make the pricing less punitive on one side rather than the other. So this has been a trend for many, many years. And so they can cap pricing. And one of the things the European regulators have done is cap pricing in terms of some of the card schemes mechanisms. But ultimately, the purest way to create competition and choice for consumers, given this natural dominant effect of settlement exchange, is they're trying to create a rival for the card schemes.
Yeah.
That's what they're doing here.
Yeah.
So it could end up with an equivalent amount of volume to the card schemes. It might end up with a lot less volume than the card schemes, but actually force card schemes to drop their prices.
Yeah.
So there's two ways to the regulator's goal.
Yeah.
Genuine competition and then price competition.
Yeah, and like in fairness to the card providers, they've been they've all innovation labs. They've probably been preparing for a day, you know, with a lot of projects that are put on the shelf, and now may have an opportunity to be taken off the shelf to kind of, I suppose, to counteract the competition that's coming their way.
Yeah.
There's one thing you mentioned in the book is about the loyalty schemes. For example, using with the cheapest retailer, for example, like that, around the card schemes as well. Can we touch on that?
Yeah. Well, historically, since the 1950s, you can argue that we've only had one payment rails, which is, forgive me, some industry jargon in terms of the underpinning rule book and clubs that are set up to exchange value between buyers and sellers. We've had one rails. Cards came in the 1950s. When internet commerce came in the 1990s, there was only one global standard of exchange for the globalization of websites, which was credit cards. Okay, it was the only way you could target your goods or services at a consumer in Ireland and America and South Africa. Okay, so there was only one rails, and sometimes with cards, there's loyalty schemes as incentive to use your card more often, stuff like this. We're now heading to an environment where there'll be two rails, okay, if the European regulator has their way. And by definition, one will be cheaper than the other, by definition. So you may find shops, either online or offline, trying to push you towards the scheme that's cheaper for them. Okay, so you could go into Tesco's, and Tesco's could go, if you use the card or non-card mechanism, will give you 100 loyalty points.
Yeah.
Okay, because they've worked out that giving the consumer 100 loyalty points is a lot cheaper than using the more expensive scheme.
Yeah.
Okay, and then you'll have other instances where the two rails start to compete for loyalty with the consumer, saying, listen, whether you're in Tesco's or whether you're in your local pub or whether you're in your whatever local service, keep on using my rails, okay, notwithstanding what the shopkeeper has on a sign for loyalty, and I'll give you incentives.
Yeah, and it's kind of, I suppose, like the way in some shops you go, if you have a minimum purchase. So if it's under €5, you have to pay an extra 30 cents or something like that.
Yeah.
And that's what's being hit. That's hitting their bottom line. So they're putting an incentive in for you to pay more.
Yeah.
And this is an equivalent way.
Yeah. Well, I think the regulators are very sensitive to things where, because the card schemes have had such a dominant position, at low values, it's expensive for so if you go into a local coffee shop and offer your credit card to pay for a cappuccino and a bagel, and it's €7, it's expensive. And in that, it's perceived as expensive given the very small values. And that's why you have signs that actually break the rules of card schemes and windows saying no cards taken below €10. Okay, so that's one of the things the regulator is trying to deal with. And bearing in mind that there's a big, because when the regulator when the shopkeeper says this, I don't under €10, somebody fishes out €10 note, and there's a big social cost to cash. Okay, cash fuels the black economy, cash fuels money laundering, people with guns try to take it out of vans. There's a big social cost that isn't actually apparent to the users of cash. So public policymakers have a big incentive to move towards electronic, okay, for safety, for efficiency, for tax collection. So there's a big public policy agenda around that, recognising that there's a big public policy issue around urban and rural. And there's no point in just having policy that works great in the cities and doesn't work in the countryside. Yeah,
wow. And so we've talked about APIs, we've talked about the banks, and we've kind of looked bank facing, but there's a whole other economy that can spring out of this, and it's coming from the account information service provider. So if for example, on an API, it's not just about my transaction, it becomes about the information about my transaction. So for example, my accountant, all of a sudden knows exactly what the ebb and flow of my cash is, where I spend my money, what products I buy, for example. And if you think of you mentioned the supermarkets, they know exactly what kind of products I buy, so they can give me offers to buy more of that product or less or an alternative product, etc. But for there's a whole new economy that could look at the API and actually offer you price comparison websites, for example. But also stuff like you mentioned, tax. They can access that. Look at your account and kind of go, you know what was that payment on the 23rd of August?
Well, in many ways, I think the real economic value and the transformation value of PSD2 is in the small business space. So I spend a lot of my time explaining PSD2 to people in a consumer context, because we're all consumers, okay, and everyone can relate to their own purchasing patterns and how they behave versus maybe their parents' generation. So it's easy enough to explain. But to be blunt, the value to the economy of a 18-year-old in Starbucks using one app rather than the other, and in fact all the apps on their smartphone are free, because guess what, the 18-year-old doesn't have much money, okay. In fact, the economic value of sharing data looks like it may be far more profound in the small business space. So if we think about small business more broadly, small business is absolutely pivotal to every national economy on the planet. The small businesses are, they absorb people of every skill level. They serve regional communities as well as wealthy urban communities. If your small business are in rude good health, you tend to have full employment. Okay, and how I explain this to people is that, you know, when a small town is supporting 3 butchers, okay, the butcher on the prime position on High Street that's been there for 80 years, then the guy who's still on High Street but down the end, and he's been there for 30 years, but there's actually a guy down the side street who has only been there 3 years, wasn't born in the town, but actually is still making a living, you'd probably tend to have full employment. Okay, so when the butcher down the small side street in the small town hires an apprentice, you probably have full employment. Small businesses, the only source of external capital infusion they can get tends to be bank loans. You know, the butcher in the small town isn't going to attract the venture capitalist. They're only going to generate a certain amount of capital from retained earnings, friends and family. Okay, when that butcher down the side street wants to expand into the unit next door and widen the counter, carry more stock, and hire an apprentice, the main source of external capital tends to be the bank. Okay, bank debt, and in that context, that butcher down the side street has no accountant. Okay, probably assuming they have the skills, may not have the time to sit down and work through their cash flow patterns, the seasonality of cash flow for the last 3 years. If they do have full books, they're on scraps of paper, they're on physical bank statements, they have their own paper-based ledger, the book in the corner of the butchers. So even if this guy should get the capital to expand into the unit next door, getting the data together to allow a lender say, yeah, this guy is not going to have any problem, even in a downturn, he'll pay back this loan. Okay. The cloud economy and the API economy looks really, really promising in terms of almost generating the loans by sensor. Okay. And it's not just a matter of the guy's cash flows. Many of these small businesses, okay, the butcher is a retailer, but you'll have small businesses that are business to business and they'll be invoicing. Okay, we're looking at a future now that's quite immediate, where all the invoices that the small business has written or accepted are accessible. The data is accessible through an API from their cloud accounting package, because now their accounting package is in the cloud. Their accountant can see their daily transactions in the cloud, and if they get behind in their entries or get behind in their reconciliations, the accountant can intervene and not wait till the end of the year. And because bank data is opening up, where the butcher thinks he's at, or where the small business thinks they're at, and where the bank thinks they're at, will be automatically reconciled. Okay, so we may be going from an era whereby, you know, a small business produces a balance sheet and a profit and loss in November, because if they don't get their tax liability into the revenue tomorrow, they're going to be paying a fine. Okay, but actually that data is last year's accounts, which no self-respecting lender will accept. They want to know how you've been doing in the last 6 months. We look now in the open data economy that, notwithstanding the fact that the small firm may not have the skills, the professional bookkeeper, the professional accountant, or the time to generate a loan application, it looks like the data set will be strong enough in the modern API economy that their ability to take on extra debt can be calculated remotely.
Yeah.
And that will be a massive breakthrough.
Yeah.
In terms of the economy, far more profound than kid in Starbucks swapping apps about.
Yeah, because it's that deep, and you know, in the world we're moving towards behavioral data versus declared data, and you know, declared data being the butcher example, kind of going, and he meets his accountant, and his accountant goes, "What was this then?" And he's trying to remember, you know, something that happened. But when it's behavioral and it's mapped behaviorally on in the moment, and then you can create means. And by the way you said about the seasonality, it's kind of giving you a mean what you're earning per month across the year. Yeah, bearing in mind the seasonality, that totally changes the game. But it also changes the time for your tax. Yeah. You know, so for an individual doing a tax declaration, but it totally I was thinking when I was reading, I was kind of going, so in a world where artificial intelligence is coming in, an artificial intelligence can read that, because it's back to what we were talking about, the Lego blocks, so it's very understandable by machines. It totally disrupts the whole accountancy world. So your small tax accountant or even your tax advisor can be disrupted by this world as well. If you know, when people build the technology more and more for AIs to do that work. Yeah, accountancy and audit. I'm not quite sure the figure. There might be about 8 million turnover you have to have before you're legally obliged to have an annual audit. And many small businesses are in the market for debt before they get to a stage of legal obligation to be audited. And audit is expensive. Okay, so
a couple of trainee accountants arrive in, sift through your books, look for unusual transactions, cross-reference everything, and then ask pertinent questions of your staff. And at the end, give a rubber stamp that say, to the best of our ability, to the best of our knowledge, what the guy says is in his P&L and his balance sheet is accurate. Okay, which is massive comfort to investors, lenders, any third party who might be taking on obligations with that firm. In an open data economy where bank data, invoicing data, more and more of this data becomes shareable, the frequency, cost, incisiveness of things like audit processes can be absolutely transformed. In other words, the human gets involved when the strange, large, or first-time transactions have been identified by the machines and not identified by the humans.
Yeah, I actually can imagine a couple of business owners sitting in the corner with data from Star Trek. Data, now just turn a blind eye to this. No, I must not. So it takes out it makes it objective, I suppose, doesn't it? And it takes out human error.
Yeah.
But it's been fascinating talking to Paul Rohan, author of PSD2 in plain English. Last thing I was going to ask you was the cover of the book. So there's an egg breaking open. What's the relevance of that?
It's much more politely phrased question, Aidan, than my kids who say, Dad, it's not a cookery book. Why do you have a cracked egg on the front? And I had a very, very clever graphic designer working with me. So a big shout out to Ellen Egan for her help on this. But Ellen identified that we needed a visual analogy to explain. And Ellen, to her credit, has no background in payments regulations or payments technology. And Ellen identified a crack egg in the basis of the regulation is breaking open the membrane of bank data, which has been held inside the bank. And now the ingredients will flow. Okay, so banks themselves will whisk their data into other third-party services, and third-party services will bring bank data as an ingredient into their services. For funds, sometimes dealing with very small fintechs, I explained that the regulation is pushing the banks off the wall, and Humpty Dumpty has hit the ground. And we're in an entirely new era where data won't be held inside the vault of banks, and under very controlled circumstances, because this is data about your money and mine and your privacy. In very controlled circumstances, this ingredient is now going to be mixed into many more types of services for everyone's benefit.
Yeah, and it really does open up so many businesses, so many disruptions, and it's going to be interesting times ahead. So where can people find you, Paul?
Amazon sells the book, but in true Irish style, I'm available online if anyone wants to buy larger quantities for a staff education tool. It's effectively designed for non-specialists because this is something that's going to come mainstream in the coming years. So this is a primer text to get any busy business person through the whole area in about an hour.
And so it's Paul Rohan, or Rohan at rohanconsult.com.
That's it.
Okay, well, great to have you on the show, and thanks for coming in, Paul.
Thanks.